everybody doing?
Hello and welcome. I'm Ann and this is Chris and this is
Lifestyle Business
on Launch Pad TV. Today we have a great show. We are so excited to build off that lively conversation from last week's show with Mayor Tubbs and Scott Sanders on universal basic income. That was amazing. What a cool opportunity to get them to sit down and drop some knowledge on us. And we're going to talk a little bit about something we talked about that week was around kind of economic lifelines.
Yep.
Right. And the use of UBI as a way of sort of leveling the playing field for entrepreneurs and giving any folk just sort of that pride and capability to live. And so we're going to talk and continuing that conversation around creating lifelines for economic empowerment on Main Street America.
I can't wait to get into it with Chris.
And that's going to be with the CEO of Caliber, Chris Loeffler. And we are excited to be able to do that. But let's just start with the pre. I mean, I guess this is the pre. This is the real thing. We're in San Francisco today, so different set. At our apartment here, we drove down yesterday with the idea of just tightening things up and cleaning out some closets.
We're kind of doing what a lot of people in San Francisco are doing these days, right?
Yeah, we're cleaning out our closets, we're packing things up, and kind of resurrecting our Airbnb business here in the city because we haven't used the apartment in probably 6 months, more than a day. So
we happen to have an 18-month-old. That's not as compatible with 3 flights of stairs.
Oh my gosh. We're definitely out of shape on the stairs. Anyway, but it was kind of crazy. So we drove back, left the house at 8:30, and we were crossing the Golden Gate Bridge an hour later, which is record time, no one on the road. Drove through the city, and I remember the last time we came back to the city during COVID, it was this feeling where it was like almost, I was having like a panic attack that there was like COVID everywhere. And in reality, COVID was not everywhere, I'm sure. But this time today, it was interesting. It definitely felt like safer and fresher. I think we've all kind of gotten to come to grips with like the new normal, I guess, if you will.
Yeah.
Gotten over anxiety and fear, which is also kind of interesting.
Well,
I mean, we went for a walk.
We went for a walk, but it's pretty quiet. I mean, most shops and storefronts were boarded up. We were actually trying to get something to eat since we didn't have any food in the apartment. We found exactly 1 restaurant in all of the Mission open.
Yeah, because restaurants, while they're open, they're doing 1 shift, right? So you don't have 2 shifts. So most of them are doing the sort of 4 o'clock to 10 o'clock shift.
Yeah.
Which was interesting in and of itself. And also everyone's in masks, which is kind of good to see. Wear your masks. I bet we're gonna have a different answer, Chris, when we bring you on around mask wearing in Arizona.
Different states, different norms. But it's interesting reflecting on San Francisco because we are packing up and moving most of our stuff up to our house in Sonoma County. But there's a lot of other people that are right now. Seems like half the Twitter feed is people moving from San Francisco to Austin. The whole momentum market strategy and adding to that lifestyle cities. I think that this is going to benefit places like Mesa, Arizona, and places that have a cost of living and sort of a balance, everything we've always talked about being able to live and work anywhere.
Right.
So many tech companies, tech employees have been told they don't have to live in San Francisco anymore.
Right. I mean, I think it's accelerating. It was interesting. I think Butterfield from Slack was just talking about it accelerating what was going to be the norm when you think about the future of work, right? So the theory is that this is how things are going to be, and we're approaching work in a more distributed way, and whether or not people are going back to offices.
Mm-hmm.
We're banking our business on that. And we're seeing it, like as you guys know, in our co-working space in Healdsburg, we see people wanting to come back to offices, wanting to have that new norm. They're also wanting flexibility. And one of our friends in Healdsburg has a restaurant here in town and in the city, and he's not even opened. He hasn't opened back up even for takeout, even though his business would be great for takeout. It's designed for takeout. And he said, you know, I just don't, I'm going to just have to lay everybody off in another 2 months. And I thought that was a really interesting perspective.
I think that's what people are worried about is we clearly are seeing spikes around the country, but how will governors and mayors handle it, and will they handle it differently? On our call this morning, we got word that Memphis may be, instead of moving from phase 2 into phase 3, maybe moving back to phase 1, meaning businesses are going to have to shut back down. So certainly there's a lot of uncertainty.
Yes.
Right? Yeah. That's the one thing we can be certain of.
Which is funny because it actually makes me, I think we all just have to sort of like ride the wave, right? And we're going to be talking with Chris about our project coming up.
Yep.
I'm pretty excited that it's coming up in fall of 2021 because I think the way we design stuff, it's actually, we don't have to change our philosophy at all. In fact, our architecture partner, help me with the name again.
Gensler was.
They were in the New York Times today.
Featured in the New York Times this morning, which was awesome.
That was kind of cool. And they're talking about how, you know, they're structuring the spaces and preparing for the future of work and how we're going to do that. And I think that we're excited about, we just need to get through the next few months, and businesses need to, but, you know, then when we come through that, unlike others, I don't think we are the believers that we're not going to go, that we'll all go back to normal and everything will be the same. I think that we dispute that viewpoint, but we do see that there's going to be really positive things that we go back to, and we are going to go back to offices.
Absolutely.
No one can sustain a work from home.
I guarantee you, everybody watching this from home right now is sick of being at home and, you know,
with their nanny and
their kids and dogs barking and whatnot. And we want to see each other, right? So
yeah, and community is super important. Okay, yeah. Moving on. What do you want to go through now? I got options for you.
Throw something out. I can't see your screen.
Oh.
We have a limited production capabilities.
We don't have our production gear here in San Francisco, but all right. Well, one of the things we were talking about was Airbnb. So we're going to Airbnb our apartment again. And I think that is an indicator that's been interesting is San Francisco had massive Airbnb apartments, which was really, really fascinating. And what we're seeing is they're coming back online because people aren't necessarily traveling as much. So those people who have, you know, high rents, but what's going to happen to high rent cities? Because people will move out.
Yeah, I think that's exactly what we're seeing.
Yeah. All right.
All right. Let's bring Chris on. How about that?
Jam up this conversation.
Chris, I'm gonna bring you in, and Ann's gonna introduce you here.
And now Chris Loeffler is the CEO and co-founder of Caliber and serves as chairman of the company's board of directors. As CEO, Chris directs and executes global strategy, oversees investments and fund management, and contributes to private and public capital formation. Today, he's here to talk about the work Caliber is doing to redevelop 9 historic buildings on Mesa's popular Main Street in an effort to breathe new life into the once thriving downtown and create an economic renaissance that is necessary now more than ever. Hey, Chris, how's it going?
Hey, good. How are you?
Good.
Everybody can hear and see me okay?
Yeah, I'm going to give a fun fact to our audience. For those of you on the OG, we were talking about Zoom snafus a few months ago. On this call because we're talking to our community and many of our entrepreneurs. And for those of you who remember the story where I got on a call and I was asking for due diligence about a potential partner, it was with Chris. Chris was the one who invited the guy to the call. So
there you go.
Mystery solved. It's good to see you.
Now that we're live across the world, anything more you want?
I think everybody on the call will do.
Yeah.
So
Well,
it's
as everyone can see, I am officially a Zennial is my actual category. I'm 35 years old. So it's been really fun over the last 3 months to get on the phone with people who have been like investment banking for 30 years. And they're like, y'all know how to do one of those Zoom calls? You know, it's like, yeah, you know, you push a button. It's not hard. Like, we're going to do one of those this time. Oh, okay, great.
yeah, that was the topic of another call where we were reminiscing on like explaining how the grandkids were calling my mother to be like, Granny, I'm gonna FaceTime you and then show you what button that you need to press on the Zoom call.
Yeah.
Anyway.
Yeah.
Well, good to see you. One of the big things we wanted to talk about was we were obviously talking about the future of work as something that comes. We're doing a project together in Mesa, and we're really pumped about it. But one of the things that I think is really interesting about kind of the work we're doing together is this rethinking the approach to development, not from through the traditional development lens. And I think this is what's really cool about what Caliber is doing, but kind of really thinking about kind of the resurgence of Main Street and community oriented placemaking. And I think that was one of the reasons why we became friends and partners. And I think it's something that is a real exciting light being shone on Mesa and what you're doing there. So why don't you just give us a quick overview of that and then jump into the project.
I mean, I'll try to paint a picture for you. So, you know, everybody knows that if you go to, you know, San Diego, you're going to go to Mission Beach or someplace in that city, and it's going to be awesome, right? You're going to be beach town. There's going to be places to eat. There's going to be stuff to do. There's going to be businesses. It's vibrant, right? Well, you know, the reason why San Diego in that area is still vibrant is because lots of capital comes in, lots of people want to be there, whatever. There's so many places that used to be vibrant in our country. And, you know, you refer to it as Main Street, but a lot of those places were Main and Main. They were, you know, the main street of that city. But then, you know, as those cities grew into, you know, a large sort of metropolis like Phoenix has, where Phoenix metro area is about the same size as Houston's metro area and about the same size as LA's metro area. So when you think about size, it's a very, very big metropolitan area. And it had all these independent little cities that had their own identity that have eventually globbed themselves into one big city. And then when, you know, you had the advent of highways and you had the advent of kind of new forms of transportation, all those main streets that used to be Main Street downtown Mesa or Main Street downtown Avondale or Glendale or all these different little cities that are in Phoenix, they all died because cars stopped driving through them. You didn't need to, you could just jump on the freeway and go to Target. There's no point, right? And so, you know, as these places died, there was probably a 30-year history where nothing was going on. You know, these beautiful historic buildings, great places to live, highly walkable. It used to be the center of town. You know, used to be where everyone wanted to be, became, you know, sometimes they became just nothing. There was no activity at all. Sometimes they became downtrodden. Sometimes they were subject to a lot of crime or whatever else, you know, whatever was happening. And so what we've seen prior to COVID was that there were areas across the country where these little main streets were like, wow, these places are really charming. It'd be nice to live within a 5-minute walk of this little main street and have these, you know, but, you know, instead of having a retail building selling furniture, which is not really necessary because I buy my furniture on Amazon now, you know, what if we had, you know, a co-working space or a cool coffee shop or a, you know, you name it, like insert interesting use of building here, right? And so what Caliber saw was that the most successful main streets that were being rebuilt around some sort of North Pole, some sort of central driving force. And in the case of Mesa, there were a couple things that came together all at once. Unlike many cities in metropolitan areas, in the city of Phoenix, no city within the Metro Phoenix area had claimed the title being the city of the arts. And Mesa built a $150 million performing arts center that is one of the best places in the world to go see a concert, right in the middle of their downtown. and they created the Mesa Music Festival, and they started to create art. And art is a driver of development in my mind, in a place where people want to be. So that was sort of peg number one, is the city government had put a lot of money in. Then they put in light rail, which is, public transportation, which put in, billions of dollars worth of transportation to get right through the center of Main Street. And then the third thing that was the real tipping point was Arizona State University, one of the largest universities in the world, decided to open a new campus in Mesa and focus it around art, innovation, digital art, et cetera. And so film. So when you add all that together, it's like, how could that area not come back? It comes from both the private sector, the public sector, the educational sector, and we're just a part of that ecosystem. And so we know it's going to work, and it's already starting to work. The traffic in downtown Mesa has actually been pretty good. If you think about it post-coronavirus, more and more, are you going to want to live in a place where you have to commute to get to someplace fun, or do you want to live in a place where you can walk out your front door and be at your co-working space in 8 minutes, after a walk, right? So those types of things I think are really going to matter.
That's great. That's great, Chris. Yeah, we are very excited to be partners with you. I wanted to, I'm gonna share some renderings because I wanted to highlight the great work. I think probably your team with Caliber and our team is thrilled about the work that Gensler has been doing.
Yeah.
We really have, our process is to sort of create a concept, and we have sort of a use plan for the space use. This is one of the first architecture firms that got co-working. We often are really in a role of educating our partners about what co-working is, B, that sort of took this arts inspired sort of concept, right? We really are trying to create a creative place, sort of a cool place to hang out, right? A co-working space is not unlike a restaurant or a coffee shop.
Yeah.
It needs to have a vibe that people are drawn to. So
which is a big part of what you do often, is sort of designing what that vibe looks like.
Right. So our process is we came down to Mesa to Phoenix, to your offices about 3 months ago, just before everything was shutting down, and walked you through our sort of concepts, and with Gensler and with the architecture team, and they've really taken it and run with it. So just want to sort of, while we're talking here, I'm gonna
visual picture's worth 1,000 words.
Pull up some renderings, and we can kind of chat about it. Let's see here. Trying to do two things at once.
While you're doing that, one of the things that attracted us to you was, I've had experience with co-working spaces before, and where I see them succeed is when there's a real culture behind it, and real people trying to drive that culture. And where I've seen them fail is when it's like, oh, here's some bells and whistles and some cool coffee maker and whatever, and put some artwork on the wall and it'll all work out. It's like there's nothing there. And so you guys have built a great culture in your business, and I think that's now going to be more important than ever, because what certainly COVID has taught us is that we can work remotely. But what it's also, I think people will start to remember probably in the next couple months, is that one of the most important factors to success is the environment that you place yourself in. And to be happy and motivated and work on your business and build every day, it's actually really valuable to be in a good environment, right?
Right.
So, if you can pay a reasonable price to be able to come to an environment where that's charged up with a lot of entrepreneurial energy that makes you feel good every day, the likelihood that your output as a business person is going to go up is incredibly high.
One thing we say often is when we compare ourselves to our competitors, and obviously there's some really big ones, and I'll just pick on WeWork because they're having some tough times, but WeWork cares about how many offices are booked, we care deeply, and you say this all the time, we care deeply about who is in those offices.
Right.
And I think that doesn't lend itself to us becoming the fastest growing or the highest scale organization when it comes to this. But I think it allows us during times like this, when you have a downturn, to actually be able to be resilient, because it's not a transaction and it's not a commodity, and there's some form of connection. And even if it's as simple as like this conversation online, it's been very interesting to see how our members have supported us through it. And I think it comes from like, we have approached it in that kind of one-to-one sort of we care perspective. And I think it'll pay dividends in tough times, and hopefully in good times as well.
Yeah, so just a little tour here.
I'm gonna move out of the
why don't we we'll
so
each sort of
shift
to the side. This is the main entryway to Launch Pad, and sort of the check-in area. You come in and have a very sort of open concept. Our trademark Launch Pad wings and Instagrammable moment is there in the background. One of the neat things about the location is that it was a former, it actually turns out it wasn't a Woolworths, but it was similar to a Woolworths in that it had a soda counter, and that still is there. So we're going to retain this soda counter and sort of have it be a lunch and collaboration area. Have that kind of diner feel. I love the tile that we've kind of selected here. This is sort of the main co-working permanent desk area. There's a brick wall that is going to be revealed, and then we have these, sort of the swooping, kind of vibrant and energetic neon pieces. Mesa and Chris, you can talk more about this. Is really known for its use of neon and its neon art. So we're going to incorporate, sort of neon throughout. And then one thing I really just wanted to highlight is the sort of the street storefront, and I guess this is spun around here. But what it's going to look like from the front, and I think this really harkens back to sort of a Main Street feel. It has that sort of retro architectural nature to it, and in and along sort of the many of the facades have sort of been degraded, probably through the 90s or 80s, and this is a restoration to just really an architectural sort of storefront. Here's a rendering of it at night.
Oh, that's cool.
Coming across, but
we've said that you got to take the 1980s away from downtown Mesa, because the 80s hit and they said, let's take all this beautiful brick and all these amazing facades that we have and cover them up with stucco, and not just like any stucco, the heaviest application of ugly stucco you've ever seen in your life.
Anyway, so thank you for, we'll be sharing more about that. Just for anybody watching, we're targeting sometime in the second half of 2021 as an opening date. So we're still very much at the beginning of this journey together, but I think that the timing is going to turn out to be pretty good for us, because hopefully we'll be through this COVID situation that we're dealing with now.
Well, and if you think about like the whole opportunity zone layover here, it's like, if you understand Phoenix, the city of Mesa, especially in downtown Mesa, is literally right almost in the center of the town. So, in most places, if you want to build more, you have to keep going further and further out. And here we're taking a part of town that's in the center of town. That's been a relatively economically depressed area for a long time, that has light rail access, that within 15 minutes, you can get to almost every major part of the city that you need to get to. And then you're taking these old, beautiful buildings that have just been sitting there for the last 30, 40 years and bringing real life back into them. I mean, that is a lot of people talk about community development in a way that's sort of esoteric, because they're just like, yeah, you know, we should make the community better and build what the community wants. Well, part of that's true because, you know, we did our work to try to understand what it was that the community would benefit from, and that's how we got to some of the things that we're developing down there. The other part of it is being creative and saying, you know, it's sort of the Steve Jobs iPhone thing. You got to tell the consumer what they want. And in this case, we knew people needed jobs, opportunity, and life in downtown Mesa. And so, what better than to bring in entrepreneurship? You know, I mean, that has so always been in the history of our country one of the most empowering things you can do for.
Yeah, it's interesting. And just picking up on the opportunity zone piece of this, I think it's, as we've gone through that journey, and we obviously were part of the EIG coalition, so we talk about operating businesses. We've been sort of on the forefront of trying to use opportunity zones to activate that sort of the business side of it. And it's been interesting because a lot of developers have used this for a tax incentive and not necessarily for its objective, right? Which is to build strong community-oriented investments that are active and thriving, and to do that, you get a tax incentive, but that is so that the, you know, ultimately we achieve the goal of impact to the communities, and then, you know, real estate prices go up as communities become stronger, and it's a self-fulfilling sort of experience. What we have seen, and I think is a big blind spot, is that I think a lot of commercial real estate is afraid of co-workings, and it's a little bit afraid of flex space, and they want it to go away.
Yeah.
And the pandemic will also be another opportunity for you to talk about sort of the fears around that but in reality, co-working is here to stay. WeWork did not survive their situation. And, you know, everybody else, everyone in the world, big brands, small brands, well-capitalized, not well-capitalized. And I don't think there's very many landlords who are going to say like, co-working space, I want them because they're a great credit-worthy tenant. We're not great credit-worthy tenants. None of them are, right? Even the ones that have raised hundreds and hundreds of millions of dollars. We're seeing them with 3 months of unpaid bills. They're getting rid of offloading all of their locations that were performing, all these things. But what we're seeing is that, like, if you run from it and you want to stay the same way as a commercial developer, and you want to just use the tax incentive for the tax incentive, you're actually missing out on the opportunity. So I think your position is right, which is if you're actually starting to do placemaking, and you're doing commercial development, if you're not including a flex space piece of that, whether that's getting a co-working operator or a co-working brand or whatever that is, you're actually not doing the things that you need, which are the ingredients to activate your coffee shops, to activate your bars, to activate
it's all part of the ecosystem. You got to build it together. Otherwise, you can't really get what you want to go to. And it's crazy that that's not obvious to some, but it's pretty obvious to me. Like, if you're, I mean, you know, my sister's favorite movie these days is The Biggest Little Farm. And like, it's all about like, oh, we're going to put in, you know, the chickens, and then they're going to help with the bugs, and then the bugs are going to help with the whatever, you know, it's all like everything works together. Right. And so, I mean, that's basically how this stuff works. It seems pretty obvious to me. And as a developer and an investor, you know, I can make a profit. Baseline, you got to be able to do that. Right. But if you can't make a profit, you shouldn't be in this business. But then beyond that, what makes the business interesting is, you know, especially since we became effectively one of the largest opportunity zone funds in the Southwest, I can spend my time, you know, before this, a pretty small group of people. After opportunity zones, I mean, we're working with city council, mayors, we're working with nonprofits, we're working with for-profits, we're working with operating businesses, we're working with other developers. The ecosystem of people I spend time with has grown exponentially. And because of that, what we're going to do to downtown Mesa is growing exponentially in value. You know, we could have cleaned up some of the buildings and slammed in a few new restaurants and been done, but you know, that's not really going to build real value for the community compared to what we're doing now. And so it's really exciting just to be a part of that, because of course there's a profit associated with it. If there's not a profit, there's no tax incentive. But you know, beyond the profit, there's also a return on our energy that is really exciting.
I love that. The return on energy is an interesting perspective. I'm
Yeah.
to get that one down for the blog post. But I also think that there's this notion of like, if you have, let's say you have one tenant, or let's say you have 5 tenants in a building, right? And each one of them takes a floor, and there's a CEO on every single one of those floors, and then there's an entire ecosystem of the company. At the end of the day, because all you do is work together, all you want to do is get home, right? And that's why we have commuter patterns, which is like, once you kind of get to an age range in the company and your company is above the 20s, everybody's got families, everybody's got objectives, everybody's got a commute, they want to get out of there.
Right.
You bring in a co-working space or a flex space, all of a sudden you have 100 different companies and 100 different people who are doing their own thing all day and are actually just dying for community and dying for that moment where they can go grab a beer at, we used to call Capitaville. It was like sort of the extension of our space in New Orleans, because everybody wants to go and just take a break and let off some steam, ask some questions. And I think that's why we're starting to see this like real community-oriented development happening, and a trend towards that. And I think in this post-COVID world, what we're going to see is the reality is that people are not signing up for big leases. They're going to be really afraid of it. It's something that they're like, well, maybe I don't need 100% of this space. Maybe I only need 50% of what I thought I needed before. And I've heard plenty of developers say to me, they're going to want more because they have to do social distancing. I'm like, they're going to want more because they're only going to bring the teams to work that need to work at the time. Like, you don't need to have your team around that table every single day. You need to have them around that table 2 or 3 times a week. That's a very different real estate need. And so I think,
well, I think you're doing exactly what you have to do to be successful. You've got to think forward. And a lot of people have thought through the first layer or 2 of what's happening next. But I think there's 7, 8 layers in front of us. And some of those layers, like, I can't even begin to imagine what they're going to look like. I just know that I'm at layer 3 right now or whatever. And one of the things that we've experienced with our team is that, and you got to ask your people, you know, so we've been surveying our people and saying, how is this going for you? We're seeing some trends. One of those trends is most of the people in the accounting and finance group are like, this is great. You know, I don't waste an hour to 2 hours a day commuting back and forth, because where I want to live is not necessarily where the office is. And I'm being way more productive. I'm hitting my deadlines better. I'm getting it better. So, and as a business person, a business owner, I've always been like, you know, remote work, until I was forced into it, you know, I wasn't really going to be a huge proponent of it, because I don't want people to lose the connectivity to the company that they're associated with. I don't want them to feel like they're all just a bunch of independent contractors, and I didn't want to lose that culture. Well, now we have, when I think about like our Mesa location, which is kind of what I think of you guys as, it's like, oh, okay, we'll have a place in Mesa. You can pay to have an employee who wants to work remote, that doesn't want to come into the office in Scottsdale, which is another 30, 40-minute drive or whatever, to just, hey, work out of a co-working space in Mesa. We'll have a little section or an area over here that like we're used to working in. We all get to still see each other, but the East Valley contingent that lives in that area can still have a place to go, but I don't have to go stand up a permanent office. You know, it's much easier if I could just say, okay, now because I have a bunch of people living in an area over here, let me just sign up an account over there, you know? So I can see more of an institutionalized version of the co-working business, where companies like us are saying, our people like remote, but we don't like them being only remote. What's a way to keep some connectivity between human beings here?
You know, I think that's exactly right. We see that already, and I think that's going to accelerate. We've been talking to some of the friends that are, you know, at tech companies in San Francisco, and some of the companies that are rethinking, you know, their real estate needs and beginning to think about okay, what is our real estate cost as a company, and can we allocate that as a stipend to our employees for them to go spend at a flex space, at a co-working space, or even on their home office, right? And you know, that's something we already have a lot of members who their memberships are paid for by their employer, and I think we'll see that accelerate.
And as someone who is sort of early days at Google, we were architecting the notion of the campus, right? And this idea that as they moved out of the garage and into the first buildings, we wanted to replicate this idea of like a PhD program that you would be at Stanford, where all of the things were around and you created this sense of community and you ate lunch together because there weren't healthy options around the corner. And the idea was not about productivity, it was actually about connectivity, right?
Yeah.
The thing is that as Google grew, we had other buildings. And so when I first, you know, we were first on campus, I was in building 43, and then there was building 41 and building 42. And even though you had this central thing, you're like, well, you know what, do I really want to watch? And then all of a sudden the next set of campuses were building 48. And then it was Crittenden, because it was a whole other neighborhood and it was a mile between, and you would either have to like take a shuttle or ride a bike or ride a scooter. I wasn't allowed to. And you know, at the end of the day, you're like, why am I going to walk across campus? So once companies start to get to a certain size and scale, the idea of having everybody in the office, mostly we're working on global teams. We're not working with the same people. And so your whole notion of like, you have to be in the office, you know, Google's rethinking that too, because they're like, well, that actually wasn't why we built campus. We built campus because we were one campus. And then as we grew, we had 30 locations in different engineering centers. Everyone that wasn't in Mountain View felt like they were a satellite office to the mothership, right? And so then it was like you came home to the mothership. But if there's a mothership concept and all these satellite offices, essentially it's remote already. And so I feel like even though a lot of companies try to emulate those days, you have to get back into the spirit of what are we actually trying to achieve? And if we are better for our economy, better for our environment, and better for our team members, then we should be designing the workplace of the future is not going to be based on the Googleplex, because Google wouldn't design the Googleplex for the future. So we need to be sort of thinking about what is the future of work, and it's not going to be recreating some bouncy balls of the past.
Yeah, and I think that the real estate development crowd, you know, that I'm a part of could learn from this type of a conversation, because at the end of the day, you know, real estate developers have always had to be long-term thinkers, right? They have to think way past, like, you know, am I really going to build another apartment complex with way more parking than I need when we're having driverless cars and blah, 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 you know, all this type of stuff. So if you think about Mesa as an example, Caliber owns 160,000 square feet of space in downtown Mesa. You guys are going to occupy roughly 20,000 feet, roughly. Just using easy numbers to make my life easier, right? Well, what are we going to do with the rest of it? Well, we're certainly hoping that Launchpad will be successful, and we can, as you cultivate entrepreneurs and grow businesses, we can fill that space up. But even if it's not the space we currently own, with us owning about a third of the entire downtown in Mesa, we're now working with the city to say, okay, let's start planning out 3 to 5 years from now, where's the mid-rise office going to be for the first 6 highly successful companies that come out of Launchpad that want to keep their space or their place in Mesa as part of their identity? You know, where's the housing going to come for people who, you know, want to have their entrepreneurs living within a walking distance to this community that they're building, like everything else. And so as a developer, if you really dig a little deeper beyond, I know that if I build 200,000 square feet of space in this area, there's demand for tenants, but actually get to know who those tenants are, and especially in the co-working space, what kinds of businesses that co-working company is attracting and what those businesses will need 3, 4, 5, 10 years from now. You could get a lot of value out of that. I mean, that's called insider trading, because you have the knowledge, right? You know, so I mean, that's legal, right? And so do it, you know. And a lot of developers just, they don't want to know. They're like, no, wait, understand the businesses that I'm housing? No, I don't want to do that. You know, it's like,
no, they literally want to send you sign the lease.
Yeah, sign the lease and then goodbye.
I send you a letter during the pandemic that they send to every single one of their tenants that your rent is due. And then they have to get on the phone with you and they're like, I don't even know how to talk to my tenants.
Right. That's right. Let them keep doing that. We'll eat their lunch. It's all good.
Yeah.
That's right. That's right. Well, and I think that you make a good point, which is like, from our perspective, we look at our impact through real estate growth numbers, right? So while we only occupy 20,000 square feet in our markets, that equates to what, 100,000 square feet, our tenants go on and even just in the last few years have gone on to lease 1.1 million in the markets that we're in.
Right.
You know, those are the kind of returns that we think are interesting. And in New Orleans alone, it was something like $600,000 or $700,000 square feet over a 10-year period. And that's graduates coming out of, 15,000 square feet. So it's
That's
actually
pretty valuable.
the ratio is
Right.
really, really high.
Right.
Yeah. How will you measure? It's probably something, we should be thinking about, and I think are thinking about together, but the intentionality of the opportunity zone legislation, and as one of the largest opportunity funds in the country, in the Southwest, as you mentioned, over our journey together over 10 years plus, and hopefully more, Mesa is a first, and then more Launch Pad locations and projects together. How do you measure that economic impact, or kind of think about that, that economic impact that we'll be able to have together?
Well, I write about some of these topics a lot because I think that if you Google opportunity zone program, a lot of the stuff you're going to read it's not factually inaccurate. It's just missing the point. And so one of the points that I think that exists is, first and foremost, 100% of what gets invested in my opportunity zone fund and 100% of the value that gets created out of that fund and every other fund in the country is a measurement of the success of the program. Because without the program, the vast majority of these capital gains probably would have just stayed invested where they were and wouldn't have moved. There's, when I talk to a lot of these people, some of our investors sold a business and they were going to sell anyway, or something like that. But what were they going to do with the gain? They certainly weren't going to reinvest it in Mesa, Arizona. They were going to put it offshore. They were going to put it into hedge funds. They were going to put it into, tax shelters in the Cayman Islands or wherever, like anywhere but Mesa, Arizona. That's kind of my point. And so I think that a lot of people that are sort of, looking at it from the perspective of, well, they did a high-rise apartment instead of an affordable housing project. And it's like, no, they just added tax base to the city that's adding revenue to the city to be able to fund its city programs that it didn't have before. And it hadn't seen its tax base increase in quite a long time. So if you think about it from just purely an economic lens, not layering in social impact and some of the other valuable components that will also come from the program, at least I think will also come from the program. Just any dollar that's been invested in an opportunity zone is a win, no matter what it builds. Even if it builds a self-storage facility, that employed a bunch of subcontractors and contractors and skilled trades who, are not necessarily the people who wield the power in our country, right? So there's value in everything that gets created. Arguing about whether the value of this project is higher than that project, that's where I need your help to measure. Because I do think some projects will be significantly more impactful for our community and for some social goals and for some other things like that. Things like what you guys do. You guys value, the jobs you create, the square footage that you use, the empowerment that you create for minority business owners, all kinds of stuff. It's really super cool. We want to be involved in that too. We don't necessarily know how to do it, as I've told you before, but that's where you can help us. But if we can all come together to the same conclusion, that the baseline that any dollar invested in an opportunity zone, invested into any project in that zone, is probably good, because those gains would have gone somewhere else.
Yeah.
Like 90% plus of those gains would have either the entrepreneur or the person who owned that building that's been in the family for 20 years, they would have just left it in the family, and they pass on, they get a step up in basis and taxes, their heirs get it, and they keep the building. So the fact that they were incentivized to sell it and then take that cash and reinvest it in places like Mesa, Arizona is pretty cool. And that's a great starting point. The rest of it is all really important too. I'm not downplaying that, but if you just start there, it's like, oh yeah, I guess that makes sense.
No, I think that is a really interesting perspective. And I think the problem I think we face it, which is, it's always easy. We're always looking for a little bit of the bad guy, right? And it's easy to take, it's easy to be like the mooch invested in a bunch of like high-end real estate. And how is that an opportunity zone? And at the end of the day, if we're doing things, and the mayors and the governors have made a decision on what places represent opportunity zones, right? So from a legislative perspective, those have been decided.
Yeah.
So investment into those census tracts, as you said, is a really essential piece of it, and that should be seen as a net positive. I also think I was remarking last week on the fact that, at the end of the day, like we often talk about the importance of operating businesses, and really where we come from there on that perspective is, how are we creating the businesses that occupy the real estate?
Right.
So that we do have thriving placemaking and we are supporting them. And I think one of the pieces that we see with zones, and with one of the challenges that is a very fair challenge, is they have not, and this is something that a city can do, like they have not given enough incentive to actually foster and support and cultivate the businesses that will occupy the buildings within the zones. And those incentives, the incentive itself is not enough to make a hedge fund guy go and invest in an early stage African-American led business, right? Like those two people are just so far apart.
They live in different
terms of their
ecosystems.
risk profile, in terms of the size of check they need to write. And so it's almost like, I think there is a layer that is either driven by the philanthropic organizations or the city organizations, where they actually need to be building the programs and the incentives to drive the sort of development and investment into these businesses, that it doesn't all need to be held by real estate developers. And what a tax incentive does is it aligns itself very nicely with people who have tax incentive needs. And those types of investors need things that have cap rates. They need things that have structured returns. They need things that have long hold time, that they are comfortable with all those pieces. They are not the ideal investor into, that early stage woman-owned business that's trying to, hang a shingle and have an e-commerce company, right? Like she needs $100,000. She doesn't need $100 million.
Right. She's not going to create the next unicorn. So you said it, the layers. I kind of look at it as the 7-layer cake. You kind of need all of it to work together. As a private developer and an opportunity zone fund, it would have been impossible for us to raise capital to say, we're a fund that does whatever we want. You have to have a direction. You can either be an operating private equity fund, or you can be a real estate development fund. Most investors are not looking, that's just not how people invest. They don't invest in just a mixed bag of whatever you're going to do. But that doesn't mean that those of us who are in the opportunity zone fund space that have real estate funds, which is probably 80% of the space right now, can't also provide capital for operating businesses. So like what we're doing with many of our deals is, if the market rate for a lease incentive is $50,000, to move into one of our spaces, we might provide $200,000 to move into the space, and we're securing that money with a lien against like the desks and the computers and stuff like that. But because we're giving that startup capital now, instead of that investor needing another $150,000 to start their business, maybe they only need $25,000 in operating capital to get started, because everything else has been purchased for them. And if they don't succeed, they take a risk that we'll boot them out of the space and find somebody who will. But if they do succeed, then they got to own 100% of the equity of their business. And all we looked for was maybe a lease with a revenue incentive or something like that. So we have a role to play. I think that, as a 35-year-old Zennial, I always look to the future and to innovation to solve a lot of our problems, instead of just sort of the past. And in my opinion, the past in funding businesses was the old VC format and private equity, and we're going to try to fund the next unicorn or whatever. Like equity crowdfunding, online offerings. I mean, people are raising $500,000, $200,000, $1 million to fund their business online, and it's not easy. It takes time, it takes effort, whatever. But if you want to build a business, that's going to be hard too. And so if you could pair up equity crowdfunding with opportunity zones and do equity crowdfunding into opportunity zone businesses. Mm-hmm. If it's a good business, it's a good business. If it's not a good business, it's not going to be a good opportunity zone investment, because if I put in 100,000 today, I have to have it be worth a lot more than 100,000 10 years from now for me to get any sort of tax incentive. The tax incentive is non-existent if my 100,000 today is worth 100,000 10 years from now. So I have to be investing in a company that's going to grow in value. And if I'm putting, if you take the check size down to $500 a person, yeah, maybe I would want to own the new bike shop that's coming into my downtown neighborhood or whatever. So I think that if you take the types of businesses that are probably going to be most successful coming out of an opportunity zone, which is going to be more of these, kind of entrepreneurial ventures, lifestyle companies, maybe local place-based companies versus not necessarily the next Uber, then you need a funding mechanism that matches up, and lease incentives combined with equity crowdfunding sounds like a really smart way to go.
All right.
That's interesting. Yeah. The equity crowdfunding piece of it is really interesting as well, because I think that's, it is the first goal of an entrepreneur is you have to build an audience, you have to build a customer base, you have to build people that care about your idea, or that you persuade people that you're passionate about it, that this thing should exist. Yeah. And it's a good demonstration of your willingness and your ability to be persuasive in that way. Get your first believers on board and do it in a crowdfunding way that puts you into business, right?
Yeah, which you may never need to raise capital for again. Some of these businesses don't need to raise 500,000 to raise 5 million to raise 50. Yeah. They need to raise 500,000. That's it, and then they're done.
Yeah, I think that's interesting, Chris, and someone will, I'm sure we'll get a chance to talk about further. But we talk frequently on this show, which we call lifestyle business. About the importance of lifestyle businesses and how they often, sort of are the in VC land, they're sort of the stepchild type business. But actually most Main Street businesses, that's what you sort of need to incent. So return structures for, VCs and unicorns, typically don't apply to Main Street businesses. So you kind of need other funding models and equity crowdfunding.
But you can still, as an investor in those businesses, you can do really well. I think that's kind of the point. Like one of the last opportunity zone panels I was on, one of the gentlemen who lives in the community we were specifically targeting to try to improve was like, hey, I really appreciate the fact that you guys are coming into our community and adding this value and all this other stuff, which was nice because you don't always get that response. It's usually a lot of responses around fear. But he was like, but, I've got a couple $1,000. How can I get involved? Like, how can I make some money off of this? Why is it that you should be the one who gets to make the money? And I'm like, well, here's how you can, and we talked about those types of things like equity crowdfunding. It's like, no, you can't put a couple $1,000 into an opportunity zone fund. There's no funds out there that are available at that level right now, at least not, I think, in a meaningful way. But you certainly could get,
because the tax return costs them $2,000 to do.
Exactly. But you could certainly get that money involved in the growth that is going to come in from the money coming into that community by investing in your own business or in small business near you, by pulling together with your neighbors and starting something and building your own space. Like if I'm going to invest tens of millions or hundreds of millions of dollars into a square mile, it's probably a good idea for you to invest in something in that square mile. right? Because it's going to grow.
You've heard it here first, folks. If you've got a couple $1,000, go buy something in Mesa.
Well, right now, buy some Caliber stock, but once the stock offering's over,
That's
then,
right.
then go buy something in Mesa.
We're wrapping. We haven't even talked about the congratulations on being able to go buy some Caliber stock.
Yeah, we're closing escrow, so it's the first round. So we had to raise a minimum of $1 million in our online offering, which I'm practicing what I preach. We're doing our stock offering through an equity crowdfunding round prior to a true IPO, and we're doing what we're telling other people to do, which is we're trying to activate, we're trying to take our shareholder base from a couple hundred to tens of thousands of people who can build wealth with us along the way. So that's on Seed Invest, which is where the offering is listed. But it's been an awesome process, and it's kind of cool. It's like every single day, it's like $2,000, $2,000, $2,000. People keep investing, and it's going to be great to spend some time with our new base of shareholders that many of which we've never met before.
That's amazing.
That's interesting. It is sort of a brave new world, and the fact that you're combining that with opportunity zones. And Ariel's just put a link to it.
Thank you.
Participation in the chat. Is that still open?
Yeah, so we have the ability to raise up to 50 million. We've raised around 1.5. We'll probably jump to 3 million pretty quickly here in my mind. And then how much we raise is really kind of a question mark, because these online offerings, you just don't know how they're going to perform, which is probably some of the reasons why some entrepreneurs are hesitant around it. But we think we'll do pretty well. We think we'll be one of the more successful Reg A plus offerings in the country. People can invest until we stop taking investment, which is primarily driven by us taking the final step towards an IPO and having to cut off the capital raise. So this is sort of like the last round of pre-IPO capital coming into a company that's going public.
Fascinating. That's great.
Yeah.
Well, I hope to, once we get Launch Pad
Mesa. I know
Mesa
more on that, because we need to talk about that.
Well, once we get Launch Pad Mesa stood up, I want to spend time doing like classes on Reg A Plus with your entrepreneurs and stuff. Be like, this is a great funding mechanism. There's something.
You might need to start with us.
Yeah. Oh, all right. Well, it sounds good. Wherever you want me to start, I'm happy to share my experience. Every entrepreneur that's had any success in their life is always happy to share their experience with those who are still trying to figure it out.
Let's end on that note, which is great.
And maybe come back and do another show specifically on equity crowdfunding. And I think it is an interesting topic, and you're practicing what you preach right now, and really interesting. So yeah. Chris, thank you so much for being with us today. Look forward to seeing you again in person sometime soon here. When we get some of the craziness kind of settling down. But really enjoyed being with you today here.
Yeah, the rest of our audience, look forward to, we'll be chatting with Chris about the formal announcement for our Mesa project coming up. And stay tuned for new Launchpad locations in partnership with Caliber.
Yeah.
Yep. Sounds good.
All right, guys.
Take care, everyone. Thank you.
We'll let Chris go. Coming up on Launchpad, we have a very exciting week next week, correct?
That's right. It's our Member Magic show.
Member Magic!
Featuring some of the great stories about Launchpad members who have been persevering, running the race with perseverance during this time. And we'll be highlighting, hopefully from all the locations, but we're getting some good stories coming in. So that'll be fun.
We're looking forward
next
to
Tuesday.
It. One of our, as everyone knows, one of our core values is our members are our magic. And so we thought we would take this little option, especially as we are heading into the 4th of July weekend, to look back and reflect and celebrate some of our most exciting members.
Yeah. Okay, well, thanks for everybody joining today. Thanks to Chris Loeffler and the folks at Caliber. It's been great working in partnership with you thus far, and we're looking forward to opening the Mesa location and more to come on that official announcement. Anything else? Any closing words?
No. Wear your masks.
All right.
Don't do it for you. Do it for the other person.
So long, folks. Thanks for being here.